Well, good evening. Welcome to yet another weekly forum from Smartkarma. And it's really nice to be seeing the attendance pick up quite nicely over the last few weeks. I hope it's a good sign that you guys are finding something valuable in what we do. So, as is customary, I'm going to briefly run you guys through the disclaimer, as I have to, and give about 30 seconds for more participants to dial in. So first of all, as you guys are aware, the forum is strictly for paying subscribers of Smartkarma. It is purely for informational purposes. It does not constitute investment advice. It is the opinion of our insight providers and not that of Smartkarma. And lastly, but importantly, Chatham House rule apply. And as such, please do not share any of this content on social media or any other public forum without express permission from us. With that, I will briefly take you through a recap of some of the ideas that we discussed in the sort of last few weeks. Before I do that, I want to just sort of quickly show you. We started running this forum in early December, which coincided with the stealth launch of the Smartkarma Plus offering. Every idea and thematic that we discuss, we actually sort of track it quite closely. So these are sort of all the ideas since December. We, of course, aggregate and look at those on a monthly basis. So for example, ideas presented in December have returned about 29% on average. Look, we do this to keep ourselves, our analysts, all of us very accountable and honest to the process, and also very objective. I think people have asked us before, how do we pick these ideas? These ideas are picked off of the data that we collect on our platform, consumption data, interest and sentiment data, and it allows us to filter and screen for things that could really be of value to everyone. So last week, in our mid-cap section, we focused on SJM Holdings. For those of you who were there, you'll remember this company started off as a subsidiary of SoftBank and spun off and has been quietly building Japan's fourth mega bank. I think it's a 10x idea over the coming cycles, but run by a very dynamic president. They also have a strategic stake in Ripple, so that this is a bit of a crypto play too. And they are building a very interesting banking franchise by building shared services around technology. We also took a close look at Alibaba. This is a stock that has really underperformed in the recent market move. We looked at the reasons for the underperformance. We looked at whether they were justified, but most importantly, we looked at a revised sum of the parts valuation, which showed that at current prices, the market is giving a negative $113 billion value to Baba's holding in Ant Financial. So that was quite interesting. And the last thing we discussed last week was, which are the Chinese companies that are going to move their primary listing destination from the US market and onto Hong Kong. So it's the ADRs that are coming back home. Last year, there were 9. There's another 27 that could come, and we looked at the short list. The week prior, we took a look at a Singapore REIT called First REIT, which had fallen 83%. This is now a special situation investment idea. There was a rights issue. Interestingly, the rights issue closed on the 16th, so 2 days ago. The stock went up 10% the day after. This is the start of this special situation now panning out. There's quite a long way this could potentially go. We also had David Blennerhassett join us to discuss the potential for SPACs in Asia. And voila, I don't know if you followed the news today, but SGX has announced that they would be doing a SPAC listing as early as this year. So, Smartkarma is really quite ahead of what happens at times. And, we had mentioned that SGX is going to try and position itself as the SPAC capital, like they did with REITs, which is quite interesting. And thirdly, but very importantly, we had also taken a look at growing concerns around inflation. This is the single biggest risk to markets right now. You saw that last night. The NASDAQ underperformed, things sort of started to roll over because guess what? It was good news in the economy. Retail sales were good. And that raised the concern that inflation is going to be higher than expected. And we're already seeing that in the Eurozone, Germany, UK. I mean, all these countries that have been in deflation territory, negative real rates, they're all reporting inflation numbers that are much higher than expected. So yes, we are concerned. We think the second half is going to look very tricky. It's part of the reason why financials look extremely good on the long side, because they're beneficiaries of early inflation. We also have, showed a preference towards materials, industrials, a lot of the names that tend to do well in the early stages of inflation. I'm not going to go down the whole long list, but slides and recordings for our previous forums are always available. If you guys are interested, you can always write to us, you can message us, and we would be more than happy to send these to you. With that, let's kick off today's discussion. So there are three key ideas. First of all, we're going to look at a Hong Kong listed Vietnam play that is really not recognized as a Vietnam play that we think could double. Second, we're going to look at Macau. Macau gaming is a very important and big space. It is potentially the last Chinese recovery trade. And we're going to discuss how to position here. And thirdly, in our thematic section, we're going to take a close look at pet care. This is a really fun topic. And I love animals, so I can go on for a very long time, but this is a brand new sector for Asia. There are a few listed companies, but not too many. But this will be a very, very exciting sector, and we want to give you a sneak peek into how it's going to evolve. So that's it. Before I get into the individual ideas, of one other thing, you can ask me a question at any point of time, and I'd love for it to be as two-way as possible, because I might not know all the answers, but the network certainly does. The analysts on the platform do, and we use this time to understand what the pushbacks are and bring them back to the analysts and bring them onto the forums as well and get them to answer some of your questions. So let's kick it off. So the first idea is Pacific Textiles. This is a Hong Kong listed company. The ticker is 1382. This has a market cap of 900 million, so it's just under $1 billion. That makes it a small cap. It's a very cheap stock. It's a value stock with a very, very high dividend yield as well. And I'm going to sort of run you through the thesis here. There's 2 or 3 different analysts who look at this space. You'll notice that the primary insight that we've picked to discuss today comes from Miyokata, who's based in Japan. That's quite fascinating. Why do we have a Japanese analyst looking at a Hong Kong-based textile company? And then there's there's a bunch more Hong Kong-based analysts too. Okay, let's take a look. So first things first, this is an old company. It's been listed in Hong Kong since 1997. It's a textile manufacturer. One of the most significant recent developments happened about 4 years ago in June 2017, when Toray is a Japanese textile supply chain and material supply chain player. It's also a listed company. Toray purchased 28% of this company from the founders, and they paid 10 Hong Kong dollars a share for that stake. Today, the share price is less than half that value. It's trading at 4.98. So that in itself is something important. Now, typically when Japanese companies like Toray buy a stake, they don't buy it and then don't do anything. They typically buy a chunky stake, wait for 3 or 4 years, and then come back and buy more. And in this particular case, that is very, very likely to happen because we know the founders are sellers. The founders of Pacific Textile are actually really old. If I'm not wrong, the main founders is in the 80s. The business has changed significantly from the time when he started it. Most of the top buyers now are in Japan. And if Toray, which is a supply chain player, wants to buy out the company, I'm sure there's a price for that. Now, what does Pacific do? Well, they make textiles. They have about 14 million pounds per month of production in China. And they have about 2.6 million in Vietnam today, right? So the split is roughly 90-10. But in the next year and a half, they are going to significantly expand their Vietnam capacity from 2.6 to 5.6. It might actually make them the largest textile manufacturer in Vietnam, which is quite important because that's how business and supply chain is shifting. Vietnam is becoming a much more important manufacturing destination. The other interesting thing is their Vietnamese factories get a tax concession, which leads to higher margins than one would otherwise expect. That's a bit of a secret, which very few people know, but our analysts picked up on it. Now, in the first half, their first half concluded middle of last year. In November, they had results, and the stock popped quite a lot on the back of it. You know, if I go back here, there was a big pop here. This was all driven by better than expected results. So interestingly, COVID did not impact Pacific Textiles the way people thought it would. But you know, this is a mid cap, it's not very well covered. So the stock has sort of drifted back down and people have sort of forgotten about it. And we love those sorts of stories, right? So what Toray has done since it's become a shareholder is added a whole bunch of new and important customers for Pacific. So their biggest customer now is Uniqlo. And we all know, you know, we can see and feel how Uniqlo has grown. It also is the largest listed company in Japan. Also during COVID, two of their big customers, Anta and L Brand, had store closures. And the Pacific guided in its results call that, hey, these stores are coming back on now, and that's good in terms of revenue outlook. Now, our analysts picked up on something else that's interesting. Pacific has been disposing warehouses and offices in Hong Kong. Look, this is an old Hong Kong company, they own real estate. Why would a company like this suddenly wake up one day and start selling its physical offices? I think one conjecture here is that Toray is interested in the operating assets, you know, the textile business of this company and not the real estate business. And why should the founders just hand over the real estate if that's not what the buyer wants? Why not monetize it? So I think in some ways it points towards future developments at sort of a Pacific, which could include Toray going above 50% and triggering the general offer. The other great things is Pacific pays out 80 to 90% of its earning as a dividend. They've done that for many, many years. And the beautiful thing is, thanks to a cash-rich balance sheet, the expansion of the factory in Vietnam has not resulted in dividends falling. You know, so despite the expansion, they can continue to pay a very healthy dividend. It's close to a 9% yield for 2021 and a 9 times PE. And their guidance for the second half is very conservative. So if you take a step back, you know, really old company with a great track record, M&A angle, stock's actually trading lower than where it traded 2 months ago when it reported great numbers. Its underlying customers are doing very well. It's disposing real estate, which means there could be special dividends. Its guidance is conservative. It's got a high yield, and you know, Vietnam's hot, and it's a Vietnam play too. And if you look at this chart, you know, it's really interesting. Pacific is down here at the bottom. This is a 2-year share price performance chart. Uniqlo, which is their largest customer, has gone gangbusters. Shenzhou International, which is one of their listed peers, has gone gangbusters. It's a very large company, actually. It's in the index. The Vietnamese index has gone gangbusters, and Toray itself has gone gangbusters also, leaving Pacific as a genuine laggard. And that's what makes it quite sort of interesting and exciting. That's the end of the thesis on Pacific. You know, once again, you can go onto the platform like I've done here, read the insights from the analysts, mark, you know, give a thumbs up if you find them useful, and you can always ask questions, right? That's quite useful and neat. You can post a question and then the analyst will respond to those. You can also go into this analytics section, and here you will be able to, you know, look at the financials, you know, look at valuations, look at the profitability and so forth, right? Very, very quickly, you can look at long-term data. And this is all data that comes from FactSet. You know, we don't scrimp on good quality data. We want to make sure that the best is available for you to look at. Cool. Once again, you can drop in questions if you have at any point of time, but otherwise I'll just sort of keep going. Okay, so the second idea today is to look at how best to position in Macau and sort of Macau itself, why it's an interesting idea. So again, there's a few analysts who cover this space on the platform. There are two particular analysts whose work I'm going to highlight today. One is from SJM Holdings, and the other one is from Michael Ting, and also from Howard. So, but before we go into that, sorry, the key stock that we want to be discussing today is called SJM Holdings. This is a slightly bigger company, I would say close to a large cap. It's a $7 billion market cap. It trades about $18 million a day, so fairly liquid name. Again, a very, very old company with a long track record. So very, very good to research and compare. Okay, so let's look at the thesis on Macau. So COVID hit Macau really badly. You know, as you guys know anyway, hospitality, hotels, travel, tourism, these were the sectors that got hit really bad. And Macau was sort of smack in the center of all of those. So at one point of time last year, Macau had lost 94% of its revenue. I mean, that's mind-boggling. Take a step back. Imagine you're a business owner. You were making $100 and suddenly now you're making just $6. That's how brutal COVID has been. And it's around this time of the year, you know, it was sort of just past Jan, early Feb, when things started going pear-shaped really, really quickly. And, you know, you look at it this year, it's precisely this time of the year that, thanks to vaccination, things are starting to pick up and recover. So you've got a very, very good comparison and almost like just juxtaposition between what happened last year and what's happening this year. Now, what's happened, you know, positioning is something quite important. What does positioning mean? We look at how fund managers are invested in a space. You know, this is something that individual investors don't get. You don't get this data easily, but, you know, we've at Smartkarma, we've served institutional customers for a long time, last 6 years. So we focus on things like positioning very closely. So look at this chart on the right. So the turquoise blue line is the number of funds that have historically had exposure in Macau. So there's about 143. Of this, we look at how many funds currently have exposure. It's about 63. And we look at the gap. So this is the biggest on record at the moment. What that tells you is that if fundamentals start to improve, there's a lot of money on the sidelines that's going to come and buy. You know, and casinos are money printing machines, great businesses with a lot of cash flow. When the cycle turns, when recovery comes, these businesses are great to own, right? And this gap tells you that we're early, and hence we can sit and wait patiently for the tide to turn. Now, it's kind of interesting. So Chinese New Year, you know, Chinese New Year, there will be recovery on a sequential basis, but, you know, it's not going to be dramatic. It will still be subdued, which means we have time on our side, right? It gives us the opportunity as investors to build exposure. The real key jump will come when China allows visa processing to go back digital. Right now, they've made it manual and they've constrained it, and it's deliberate. The moment you see a news headline that visa processing has gone digital, Macau is going to go gangbusters. The second thing is, in August last year, if memory serves me right, China allowed residents of the city of Zhuhai. Zhuhai is just across the link. There's a new bridge, the Zhuhai Bridge, which links from Zhuhai in Guangdong into Macau. They allowed the residents of Zhuhai to start coming into Macau more easily. And that was already a massive boost up. Now, over time, if they allow residents of other parts of Guangdong to start coming in, they don't have to open it to all of China, but Guangdong itself is about 90 million people. I mean, that's massive. Macau is going to go gangbusters if that happens. And we know there's pent-up demand, right? We're all sort of feeling cooped up. We want to travel. And if they allow people from Guangdong to do day trips, just drive into Macau, I think that's going to make a big difference. And most importantly, when we look at the Chinese economy as a whole, a lot of it has already recovered. You know, it's hard to find a good recovery trade now, except for Macau. So, you know, there's a lot of sort of things that are attracting us to Macau right now. We are early, as you can see from this gap, but, you know, that's great. And now, what name do we pick? How do we want to play this thing? There's a few different stocks that are listed in Macau, but the one that we have picked is SJM here to feature today. There's a specific reason. It's heavily ignored, despite it being an $8 billion market cap, trades 20 million, but it's ignored. What people are really missing is that SJM is opening a whole new casino, which is called the Grand Lisboa Palace. And I'll show you photos in a second, but this is an iconic new building. In fact, it'll be the only operator that'll be launching such big new capacity this year. It's about to open anytime now. And this table shows you what that does. So Grand Lisboa is what they have, and Grand Lisboa Palace is what they're opening. So this is the new facility. In terms of rooms, it's like about 3.5 times as big. In terms of slots, 3 times. In terms of tables, 3 times. So this can, you know, double or triple the capacity that SJM has. And when that happens in a market that's about to recover, you get market share. And when you gain market share, investors have to own you. So that makes SJM really interesting. And it's cheap relative to peers, despite having a very liquid, almost near cash balance sheet. That's important because some of the other players, you know, like Win and Sands, they do not have similar balance sheets. In fact, some of them are deeply in debt. So that's SJM. I told you I'm gonna show you a few pictures. So Michael Ting wrote this piece. So this is what the Grand Lisboa Palace in Cotai Strip is going to look like. So visually iconic, right? It will definitely draw in visitation. That's what Michael says. And of course, it's not going to ramp up immediately, but it will definitely allow SJM to gain market share. Okay. And this is a recent report from Stephen Holden on positioning. So this is what I was showing you earlier, right? Average funds have dropped their weighting in Macau significantly. A lot of money has flowed out. You know, these are many different ways of looking at it. You can even see, you know, let's look at this. Who's bought or sold Macau in the last 6 months? So BlackRock has actually, you know, bought Macau, right? But you know, there's a lot of these funds out there that have nothing at the moment, and that's the opportunity. Okay. And the most well-held stock in Macau right now is Galaxy, as you can see, and SJM is, you know, several rungs down, so despite the fact that fundamentally it's probably the best position at the moment. Cool. That's the sort of end of the presentation for SJM and Macau. Again, you know, feel free to ask me questions now or post discussions on the platform later at your leisure. Okay, lastly, let's talk about a theme. This is a really fun theme, as I mentioned. It's about Asia's pet care sector. You know, as you can see, this is the growth in just China's pet care market and only dogs and cats. I'm sure they keep other types of pets too, but this is the data we've got. And, you know, this in itself is a tenfold growth in the last 10 years, and the growth rates are accelerating. So that's the type of market we like. This is a 200 billion yuan market that has grown 10x in the last 10 years and is going to grow faster than that in the next 10 years. That's exciting. So there are 2 insights that I would draw your attention to. One is from Devi Subhakesan, and that talks about Asia's entire pet care sector. We've also published a report on the Chinese medical pet care industry. So this is, the veterinary side, the medical pharmaceutical side, which is also important and interesting. Let's take a close look. So first of all, this is a Smartkarma original. And there's a question out there, what is that? So sometimes when you go on the platform, you will notice these badges. It says Smartkarma Originals. And if you guys have Netflix at home, you know what a Netflix original is. It's something that is very deep dive, something interesting, something detailed, an area where analysts would typically not write research. And we use our own balance sheet, our own capital to get this research produced. So that's what we did in January, and Devi published this on the 3rd of Feb. So it's still a very, very fresh piece of research. It's quite detailed. So definitely grab a cup of coffee or a glass of wine before you read it. But the quick summary is, as I was mentioning, China is up 10x in 10 years. This is the biggest market within Asia at the moment. But let's compare it to the US, right? This is the two charts here, right? So the first chart is pet penetration by household. So in the US, 69% of households have a pet. In China, that number is only 23%. And clearly, it's not going to stay here, right? It's going to grow. Now, when you look at it in dollars, if you look at dogs, for example, by the way, I was having a lot of fun putting these charts together here. But, China's got 55 million dogs, US has 77. And, you can look at that on a per capita basis. Similarly, cats. And today, China's pet care industry is about 1/3 the size of the US. And we all know, the population is about 4x. So this number can grow very, very big. Now, the big trend here is less kids, more pets, and more spending per pet. That's what's happening, right? People are spending a lot of their disposable incomes on pets. Interestingly, India is growing even faster. But today, the entire size of the Indian pet care market is $500 million. So it's not big enough. China is at about 32 billion, so 64 times. But the growth rates are going to be better in India. So if you guys are looking for startups to invest in, you might want to look at Indian pet care startups, because I think the trends are very interesting. A lot of this growth is being perpetuated by social media as well. This is a mind-blowing statistic from Cisco, that cat videos and binge TV together are 84% of entire internet traffic. I mean, that is insane. That's enough to get me convinced to read deeper on this. And now how to play this. So, it's always important to bring it back down to what's actionable and how do you do this. So Devi has mentioned a bunch of stocks here. This is broad-based exposure to China pet care. And then Chris Wong, who's based in Shanghai and covers healthcare, she has also in her report talked about several stocks. China animal husbandry. A lot of these stocks are listed in the onshore Chinese market, the A-share market. For those of you who are dialing in from Singapore, it's actually really easy to buy onshore stocks now, thanks to the Stock Connect. Most brokers now allow you to buy A-share stocks. I think Interactive Brokers is also probably about to start, but certainly name guys like Poems and so on definitely allow it, and it's a big market. So what we've done is we've actually set up two watch lists, a Pet Care Asia and a Pet Care China medical industry watch list. On Smartkarma, you can set up as many watch lists and then you can sort of share them. So here, if any of you guys are interested, ping us, we'll share these watch lists with you, then you can dig deeper and look into the individual stocks. But for today, we just wanted to introduce the theme, the big picture, and tell you just why we find it such a fascinating theme to look at. With that, I'm at the end of today's presentation. If you have any burning questions, now's the chance. Otherwise, we're going to chat next Thursday. Okay, great. I think you guys are good. By the way, you can always ask me questions on things we discussed at the previous forums too, so that there's continuity and regular dialogue. But thank you very much for attending. Great to see you all there. I love the fact that the numbers are growing every week. Chat soon. Bye.